We have Keith Stan joining us right here on ET Now to talk about what's going on globally with respect to commodity movements and developments. Keith, thank you so much for coming on board. Just want to start with asking you about iron ore prices, which are seeing a massive surge. Is the supply situation that bad?
Well, yes, and thanks for having me here again. The supply situation is tightening. Hearing some feedback. I'm sorry. Some feedback, yeah, we're seeing the Vale Dam issues that have happened since last year. They are still persisting, and then increasingly we are also seeing shortages from the Australian market, with some of the ports having some congestions. At the latest, we have also heard some of the Australian miners coming to curtail some supply in the spot market in order to maintain their shipments of high quality iron ore to the Chinese customers.
What about steel? Do you see prices for steel as well as iron ore being capped because of the expectation of a lackluster demand?
Well, if you're talking about the Chinese situation, I think it's a pretty much split between what sector we're talking about. So if you're looking at flat steel, this goes into making of automotives, white goods, machinery. There is some slowdown in growth in China happening on that front, and we are therefore seeing some of the steel prices take a hit. But much of the market is expecting the Chinese government to continue to invest in the infrastructure sector, and this should be helpful for long steel products like rebar, for example, and wire rod. On the property front, there have been a lot of efforts to try to curb the over-exuberance in price rises, but we have seen actually from the start of the year, actually for the latest figures from April, property prices have resumed a slow, steady climb. So that might be one of the factors that could help support the long steel prices. But overall, entering into 2019, I think it's fair to say that we have come to a situation where steel making margins for especially Chinese steel mills being much weaker than what we had seen in 2018, which was a very good year actually.
You know, global growth is also slowing down. So would you say that would hurt the prospects for steel prices going forward?
I think what we've observed of late is that indeed there has been a slowdown in growth, not just within China, but also outside of China. So we are tracking some of the trends in the spot market, especially for global steel trade. Recently, we have even seen cargoes of flat steel coming in from Europe to the Southeast Asian region. Southeast Asia is clearly one of the key consuming regions, not just in Asia, but actually also globally. So we have not seen European steel come to Asia for a while now. It's difficult to say whether this will be a longer term trend, but I'm sure you would have noticed as well that the European steelmakers, actually 45 CEOs of European steel companies, they appealed to the European government to do something to address some of the steel that they feel is being deflected to the European markets as a result of the US tariffs.
Right. Let's also talk about what's going on globally. The biggest concern right now is the ongoing US and China trade war. So do you think the market has moved on and priced in the expectation of a full-blown trade war between the two entities, or is there still hope for things to improve and for the trade war to sort of get resolved eventually?
So I think it's pretty difficult to forecast what will come out in terms of the outcomes of the trade wars. Situation keeps being fluid and it changes every single day. With the latest tweet by President Trump, but well, what we have seen so far is that confidence in consumption actually on the retail side, that's perhaps taking a hit, especially in China. Whether it will spill over into the rest of the region, into the rest of Asia, that's also something that I think we all need to be on the alert for. Actually, some people have identified some bright spots in this because a part of the manufacturing might have shifted outside of China to other countries like Thailand, maybe Vietnam. So it may not be all that bad from depending on which perspective you're looking at.
Okay. We were talking about the massive surge seen in the iron ore prices, but steel prices are really not participating in the rally, and this is going to lead to margin compression. So would it be to the extent that we may see some Chinese steel mills once again considering curbing operations? Could it be that bad?
It's a very interesting question. It's a very good one as well. From what we have observed previously, Chinese steelmakers tend not to let production actually be led by government policy or even demand and supply situations. I think the key factor here is margins. Yes, we have seen annualized production figures, crude steel production figures by China reach 1 billion metric tons in April. If you analyze the April figures, that's certainly worrying to a lot of market participants, and a lot of critics, of course, are saying that this is happening in spite of the supply side reforms having taken place. But this year alone, we have seen actually 11 million tons thereabouts of new or actually replacement capacity having come on stream in China. They produce mainly flat steel products, so that could mean greater supply in the flat steel market. But beyond that, we are also expected to see further capacity come on stream for the rest of this year in China. But beyond China, what's also in fact worrying is that Southeast Asia is bringing on stream its own capacity. So Southeast Asia had been one of the main consuming regions, absorbing a lot of what China has been exporting. So once they increase their own self-sufficiency, I think a situation we might see is that so far over the past 2 years, I think very strong Chinese domestic prices have meant that there have not been so much of an incentive for Chinese mills to export. So we have seen actually 2019 perhaps being the fourth consecutive year that steel exports by China have declined in terms of volumes. If the steel mills in Southeast Asia bring on their own capacity, then that might mean that in the event of a worsening domestic market in China, they might need to export more. But then the big question here is who is to buy all that steel, with Southeast Asia being more or less also self-sufficient. So at the moment, we're still seeing Chinese steel margins on the positive territory, but things could change quite quickly. So since the start of this year, it has been actually on a steady decline.
Right. Just before we let you go, want to also understand about iron ore prices. You think they'll stay above $100?
Well, it's exceeded 110 in fact, and I think what would be key in determining where prices might go would be whether Chinese mills cut production, which is a question determined again by the margins that they make. At the moment, they're still in the positive territory, so perhaps we are not seeing anyone announcing or planning some cuts in production. But bear in mind as well that we are in the third quarter, we are approaching the third quarter of the year, and this tends to be a period where there is a seasonal lull in demand in China, especially with rains happening. It's also the case in actually some parts of Southeast Asia and India, of course, where the monsoon will also tend to curb some of the demand. So where Chinese mills, if they start to cut production, then perhaps there might be room for iron ore to take a break. But I would say at the moment, actually, the iron ore situation has not been driven so much by demand as it is by supply. So supply tightness seems to be the main reason we are seeing why iron ore prices are rising at the moment.
All right. Keith, great chatting with you and great getting in your perspective and your insights on what's going on in the iron ore domain as well as for steel. Thank you so much once again for joining us as well. And on that note, I think we're completely out of time on this edition of Markets Fatafat, and that's all the stocks we could cover. Thank you so much, Kunal, Swati and Soumya as well. With that, it's a wrap.